Good morning, Predicted Trades family. And thanks for tuning in yet again for another morning prep. It's Friday, May 13th. What a week we've had. The last 2 days have been absolutely insane in the room. We have caught, it feels like, every turn in the market perfectly. If you go back and review yesterday's prep, I did break down the previous day of how we went long, running into trend line, shorted back, long, and then short again. I feel like we nailed every one of these turns. And then yesterday we got it all over again. Opening near our clouds. We let the bounce happen and then caught calls on the second, on the double bottom. Rode calls up to our zone. Key price levels right at the top of our clouds. We lock up all our profits, switch directions again. Ride puts, lock up profits. Some folks caught a bounce here and another short, and then a long to finish the day. What does that look like on the options with our tools? Let's go take a look. The first play of the day was long. We hit the 400 call on SPY. It opened kind of at our beast zone. We let the little pop happen when it came back for that double bottom on ES. It was fully in our buy zone between the red hashed and the cyan hashed. We got in this for about $2 and wrote it up to our shaded take profit zone for a nice double. They even kept coming back to allow us to get out at a double. And about the time that we were locking up all of our calls, 10:45, 11, they start to lose value. We're watching the puts. The 380 put on SPY fell while it ran in the morning, and then right at around 11 smacks our buy zone, our beast zone, that cyan line. Smacks that at around 30 cents. We rode that up to $1 for over a triple. It did come back for a 50-cent re-entry before taking off to $1.60 in our shaded take profit level. From there, rolls back over, and when we're taking profit on our puts, you guessed it, we're getting right back in calls. The 390 call, we stepped down on strike after playing the 400s earlier. As the day progressed, we stepped down on our strike, so the 390 something much closer. And lo and behold, it settles in our buy zone. We pick it up for $2, ride it up to 4 for yet another double into the sunset. We also picked up the 4,000 call on SPX. Like I said, some folks hit the pop midday, the bounce around noon after this big drop. That's because the 4,000 call entered our beast zone, our buy zone, at around, just call it $6, runs up to just about 12, another double out of our buy zone. Then it loses value on the calls while the market had a bounce and then rolled back to those squeeze bottoms. But ultimately, when it hit our buy zone right here at about $3, we all loaded in to the 4,000 call at the same time that we were loading into the 390 call. So $2 here to 4, $3 here, closed around 9. And these bad boys are already up to 22.20 pre-market for those that swung. So, and they're up so nicely because the market decided to just keep on trucking on that momentum. We did get down near 38.50 with a big key level. 38.50 to this 43 was kind of what we were watching. And it stopped at 55. caught a pop and a higher low. That's when we loaded in. So now, let's get ready for today after reviewing yesterday. ES. That big key zone that we kept bouncing at and then we rejected. We have fought back to it overnight for a nice little wedge through this trend line from the highs of Wednesday. And we are still trucking. We are about to get a little bit of economic data. Let me pull that up real quick for you guys. Today, we have import price index. Not that big a deal at 8:30. Shouldn't be such a big reaction to that. But at 10 a.m., we have University of Michigan Consumer Sentiment Index, CSI, and we have University of Michigan 5-year inflation expectation. So they put out this inflation report every so often. I can't remember if it's quarterly or monthly, but this is kind of a forecast of inflation as they see it at University of Michigan, where they track it and put out a report for the market. This report, when it hit in December, near the end of December, some of the folks in my trading circle talked about that would mark kind of the top and that we'd see a lot of profit taking this year. That has proven to be true so far, so hats off to them, although they didn't quite capitalize on it like we do. But overall, 10 a.m. when this report drops, the market could get pretty wild today. We are on a nice trend up. We have fired a number of these squeezes. We still have a couple intact. We're pushing against a 30-minute. We've got a 2-hour above and a 4-hour way above that. Back above the daily 8 and at our key 40.56. My goodness, if we get there today, from 38.50 to 40.50, 200 points, whew, be pretty nuts. But we can easily say that we're only up about 50 with an ATR of 100, so we can absolutely push another 50 if we want. We have the daily 8 up above, and our squeeze clouds are, kind of thin compared to what they've been all week. So we could rip on through, get up to that daily 8, get up to this key 40.56 4-hour squeeze top. Also, the first Keltner is sitting up there. So from almost tapping the third Keltner, and just real quick, I love to point this out. We did not quite tap the third Keltner yesterday, but look to the left. I drag this straight over. We did tap where the third Keltner was the day before that. So as these things can be moving and stepping down or stepping up with the price action, it is always good to note that. I know that when things are dropping and you have a key level, you're like, oh, it's going to go hit that key level. And it doesn't always have to. And sometimes there's a simple explanation. So overall, let's see. Today, the thesis is, every day we're going to put out a thesis to give a roadmap and plan for the upside and downside. Yesterday, the thesis was, hold these squeeze clouds, get up to the top in our key zone, roll back for another test, and maybe finish strong. As the day progressed, the finish strong became more and more apparent, and that's why we loaded up so hard to the upside, because they just weren't trying to really go past certain levels. So today, the thesis is we're up near squeeze tops. We need to be cognizant that there's potentially going to be some profit taking, which might pull us back to this zone. We have that squeeze bottom right there under that zone for some cushion. We closed, kind of back here with a gap up. Frankly, I am feeling or leaning to the upside after such a strong push. So I can see us hitting this, a little profit taking back to this zone, and then ultimately a bounce higher to test these levels. But just like any profit taking, it could be profit taking to this level and then further to fill the gap, or even retest the second Keltner. We do have those larger time frame squeeze bottoms, the 2 hour and 4 hour stacked together, right back at kind of the lows of yesterday. So we're up above yesterday's high, which topped out in this zone that we've been watching all week. We need to continue higher. We need to hold that zone and those highs to keep on pushing. If we give out, we can start to slip back, fill the gap, test squeeze bottoms, which would still sit in a higher low to allow for a move up. In Q. NQ is up the most. On this pop yesterday, it was a lot of rotation into tech. We talked about that yesterday in pre-market prep. We saw it for the first half of the day, pretty much. Lots of rotation into tech. Facebook fought its way back up to the top of that gap fill. We'll take a look at that. Apple fought its way back above 150, right? Or no, I'm sorry, not 150. Back above 140. We'll take a look at all that. But ultimately, NQ, kind of the same story. It ran up, rejected a key level, came back, found its feet. Now it's through that key level. It needs to become support. We can slip it just to tag the squeeze bottom and these pre-market lows. We need buyers to step in there to send us higher into the squeeze top, which is already starting to open up. So yeah, we'll see if there's profit taking to retest highs and key levels, or if this is a gap and go and they are just ready to buy. Should we reject and roll back, give out these highs, same thing, we're going back to revisit yesterday's price range and potentially squeeze bottoms. Ready. Same story as everything pretty much. I will say the Ready was a great gauge yesterday while all the other indices were down near their lows. Some of them setting new lows, some of them not. The Ready really held well and started kind of bouncing first. I always just watch it as a gauge because it can kind of arrive at targets first and roll over, or hold at targets and bounce first, just because it has so many stock tickers in it. It can kind of have those oscillations and reactions quicker, if that makes sense. So keep an eye on it. Already starting to push through the squeeze top, just like everything else. It might be a good indication for a gap and go or profit taking. Keep an eye on it. Excuse me. YM. Same thing. Key levels. Ran up and rejected. Now we're back above. See the common theme? Definitely mark your key levels. That's why we do prep, so that we can show them to you every day. Let's see if we can hold above that level. Keep on trucking. YM is setting new highs pre-market, so it looks poised and ready to go. Ooh, and we just had that economic data drop, and it looks like very little reaction. We go back to ES. Let's even drop down to a 3-minute just to see. Came out at 8:30. Yeah, pretty much no reaction. Nice pop. Still under trend line. Let's see. Let's see if we keep pushing this trend line into open. Yeah, let's see if we keep pushing against this cloud into open, or if this trend line fades us back a little bit and we open a little closer to all this consolidation. But I love what I'm seeing. Let's get back to the names. Apple. So, excuse me, did not get back above 150, but at least did not go and stay below 140. Apple did fully test its third ATR yesterday and turned right around. That's why we watch these things. It does have a teeny tiny squeeze in place. It looks like a 1 hour. How do I know it's a 1 hour? Oh, it's right over here in my watch list. 30-minute, 1 hour, 2 hour, 4 hour daily. So, got a little 1 hour in place, just a couple of bars in. We can easily take that out and just keep on trucking. I'll give you, for instance, if you see this little tiny gray mark, that is technically a 30-minute squeeze that started midday, and Apple just took it out real quick. So it disappears. We fight on back, it reappears. So when they're thin like this, we can absolutely just tear right through them like they weren't there. But we'll have to see. We've got a pre-market high on Apple right near yesterday's high. So like the market is above yesterday's high. Apple is just tapping the door. So we need Apple to fully take out yesterday's high and keep on trucking for the upside. If it keeps rejecting yesterday's high, we'll see a rollover, some profit taking to fill the gap. AMD. Called out each of these levels, said I could see a dip to 84.41 in yesterday's prep, get a 30-minute candle close and push off of that, and you'll get up to this 87.89. Go rewatch the prep from yesterday. Called these levels out. That's why we mark them. Now, look at that big old wick. Back down to hit that, and we're pushing higher. So, chips, just like I said, Apple's not above yesterday's high. Chips are, and they're trying to push, looking strong. Amazon, kind of like Apple, just pulling up on yesterday's highs. Amazon did have quite a ripper from the lows, almost 200 points if it had gotten a hair further. Oh, it came back, excuse me, with the market. But ultimately, Amazon is now back above the third Keltner for the first time in quite a while. Don't want to get too overly giddy and bullish and think that this is the start of the run-up into that stock split, but let's keep an eye on it. It did really lead yesterday in the morning. So it can keep on leading and drag the market. It has the weight to do so. Cat fell down, tapped that 200. Talked about that yesterday, pre-market. Caught a great bounce, which seems to be continuing. Let's see, bid and ask. Yeah, pretty much up by yesterday's highs. So Cat could have a nice strong push today. Close around 203, 7.8 TR, up a couple of bucks. Yeah, we could get up to this 210 and above the daily 8. definitely watch this daily 200 and daily 8, creating this nice little zone right in that squeeze top. That could be where it takes a break. Facebook. Oh, look at this gap. The zone slipped into it just to try to get right back out of it. Higher low, and we're up and out of it. But we are in this wedge, right? Very clearly. We have a key level above. Let's see if we can hold this 193 gap fill level, push through this downtrend of the wedge, take out this key level, and use it as support to move higher. We have the daily 8, kind of where we topped out yesterday, and we have the daily 21, the mean, right up here near the top of this 4-hour squeeze. Facebook's going to be a great, great gauge today. It has been trying to lead, just like as strong as Amazon was yesterday. Facebook was also. We needed to get back to the mean in the back and this 4-hour squeeze top, and just kind of settle in these liquidity levels to have further upside today and next week in tech. If it stays below this 195, can't get through this trend line, it's going back into the gap fill. It can always come down to tap trend line around this 188, take right back off and finish the journey, right? Just like, most of the days where we're dipping first. So keep an eye, this wedge, this level on Facebook, going to be pretty key today. Google. Oh, I think we talked about how Google, this is a great drive up, but it was kind of playing catch up. Everything else, like Amazon and Facebook, were trying to lead. Google finally dragged its bones out of bed. But look at it now. Gapping up above yesterday's highs. We do have all of these squeezes stacked on each other, though. So, might be a hard fight for Google to get through those, but at least it is at the daily 8, daily 15 above. So, would love to see an open pop on tech, everything drive up, and then take a break. Doesn't have to come back. It might, but we'll see. Keep an eye on this 2260. If we start to give out yesterday's high around 2285, we could go to fill that gap. GS. Also looking nice and strong this morning, up over yesterday's highs. It would help the market if GS was ripping up, pulling YM with it. Same as CAT after that 200 test. GS with that 300 test. So let's see if we can get that gap and go. Looks like this squeeze is already opening up. We do have another one up above at a couple of key levels. So let's get a pop up to this first one in the daily 8 at open, and we might have a good idea for if they want to just continue or reject and send it back down. JPM, pretty much the same. Not really going to cover it. If I'm going to play finance, it's going to be GS. But pretty much same scenario. Can it get through these squeeze tops back to daily liquidity? Does it reject and roll back over? Microsoft. Microsoft was a little weaker yesterday as far as leaders in tech. It was kind of slipping the hardest at open, and then it got drug up while, Amazon and Facebook were raging. Ultimately, it is back above yesterday's high, and this daily squeeze is still intact, so it will be showing up for support. So let's see if we can just take off from the squeeze bottom. We don't have any squeezes above. So yeah, Microsoft could just take off from this point and fly right up to the daily 8, the first Keltner up down, which is up above, and this gap fill level back at 270. Sickeningly, Netflix was one of the leaders yesterday. So, personally not going to be an interest for me today, but at the very least, just like Amazon, it's finally back above third Keltner. So, maybe it's done getting its ass beat. We'll see. But not a big focus for me. Nvidia. Ooh, I don't like that. So wicks like this can mean one of two things. A dark pool print came through back at a previous price, and so it got filled. And it's people just trying to get into the move that's about to happen. Or it is a precursor, and we go back to fill the gap. Ultimately, just like AMD, we are up above yesterday's highs, or right at it. We are at that second Keltner. Let's see if that can hold. We don't really have any close squeezes. So if we... nice little pop again right at VWAP. Everything's kind of looking like a gap and go, but keep an eye around 170. That squeeze top, keep an eye at this trend line around 172. If we do pop first, we could see rejection and roll back there. Hopefully, it doesn't want to go fill the gap and visit this wick back at 162. QQQ. QQQ with that annoying wick as well. Oh man, we got in those 290s. They got in the money. And today, congrats for those that swung a little bit, because now they're deep in the money and about to open almost near 298, 300. So let's see if she wants to keep on pushing, get up and tap that 300, which would be reaching outside of these squeezes. We might see a little rejection there if we get through. Daily 8 above in a 4-hour squeeze. We closed around 291 with a 10-point ATR. It's, you know, basically to tap in this daily 8 because it is going to step down a little bit. Should land around this 301. So, that's 10 points up from where we closed on a 10-point ATR. Be careful around there. Might see some profit taking or whatnot, but you never know. If they really are buying the dip this time around, it could be a gap and go. We could see this run to ATR, or at least 1.5 up to this 4-hour squeeze at top. Shop, not a real interest. Frankly, I think it's just moving with sympathy on Amazon. But you never know. Just like the others that have been getting beat up, we are above. Oh, okay. Shop did hold third Keltner, and now it's back above the second. So, okay, Shop. We'll see how it deals with 380. Yesterday's high 385. If it gets through that, next Keltner above around 400, big psychological level. No, not a real interest. But you gotta squeeze. You can play it up to the squeeze and the Keltner up there. Might see some rejection and roll back, fill the gap. Not a real interest. SPX, ooh baby. Where are you gonna open? ES, pushing for more. Already up to 82, let's go. So this is probably going to open at 4,000. Those 4,000 calls that we bought late day, probably about to be in the money at open. We will be doing with a gap up on SPX. So let's see if it wants to come back and fill. A lot of times it does. Hopefully it does a gap and go up to key points to reject before trying to come back. But I will say, you know, even if it is going to gap up, and it likes to fill gaps. I mean, we have tons of price action in that range, so it doesn't always have to fill a gap. But Let's see what we get on SPX. We do have the daily 8. Yesterday around 40.44. It's probably going to step down around 40.20 today. So that might be the first thing that we tap. And yeah, daily mean still way up above. Yada yada. Spy. Oh, back above second Keltner. And yesterday's high, and trying to push some more. Close at 92, up at 98, so 6 points up. On a 10-point ATR, we still got a little room. And we can basically get up to the daily 8 as well. So keep an eye on that. Would love to just see a gap and go, get through these squeezes, go tap daily 8 and this 4 hour. So we can lock everything up and then take a break. And enjoy our Friday. Square. Definitely been getting beaten up. Bouncing at third Keltner, trying to work its way back. Not too far from that daily 8. Personally, I'm going to take a break on Square. It was a lot of fun back up here at that 100 and higher level. Even though it's slipped down here, you know, the premiums are still very nice. It's still very playable. I'm just having too much fun with SPY, QQQ, and SPX, so going to focus on the markets. But Tesla, back above 770. Ho ho ho. What do you know? There was a news blip that the Twitter deal is on hold. Musk actually said that himself. Twitter deal is on hold until they can verify that the bots only represent 5% of active monthly users, something or other. Basically, the way I interpreted the article I read is if bots make up more than 5%, like it's something like 20% of average monthly users, the deal may stop and be off. I'm not sure. It might mean change to the price. But it's very interesting that he said the deal is on pause right now when Tesla slipped below 750. And now that he said it's on pause, it's back above 750. So maybe investors have had enough fun putting his feet to the fire and taking profit, and who knows, maybe they're about to just rip it right back up. Tesla's up a good amount, way up above yesterday's high. Relative strength-wise, Tesla is trying to show it, right? Let's see if there is any dip in profit taking. Watch this high from yesterday, right around 760. But ultimately, this thing can get back to this daily 8 today and get back over 800. Close around 28 with a 60-point ATR. That's around 790. So we're almost up an ATR. Let's see if this thing wants to just go push out another half or another full ATR and then come back and take a break above 800. But if it keeps rejecting 790, 800 a zone, we'll come back, tap 760, 750, this key 744. Downside targets if we start to slip back. And last but not least, Vixx. Oh, Vixx, what a gauge, what a helpful gauge yesterday. I mean, we saw it get up here, couldn't get through pre-market high. At the same time that ES double bottom, it rolls over below our key level, gets back above, still can't take out that high, stops at the same high, and rolls back over. That was such a great gauge. And now look at us from almost tapping the squeeze top, right down at the squeeze bottom and pushing. Vixx 30, going to be very key today. Unfortunately, we have all of these squeezes, but we can reach down below 30 to this zone and still be in these squeezes, which will start to open them up. Let's see if we can get below 30. I expect a little bit of a bounce at this zone around 29. A retest of 30 and head lower as these squeeze clouds open up. If we actually get that gap and go upside today. If we don't and we see profit taking, we'll probably see a tap and a bounce of 30 and a rip back up to fill the gap. Definitely watch that gap level right around 32. So just upside downside scenarios, right? If the market's going to have profit taking and go back to fill the gap, VIX is going to bounce at 30, probably go back to 32. If we're going to gap and go, VIX is going to give out 30, come down to this zone where it might catch a bounce and a retest before heading lower. But we do have these squeezes. We have gotten our big old gap up. I'm definitely going to be taking a little profit at open, just like everybody else should that swung. And then we'll see. So yeah, thanks for tuning in, everybody. If this is your first time, I highly recommend you come check us out at predictedtrades.com. You can come join our server for free and start to learn a little bit about our system. Good luck today, everybody. See you in the chat. Let's have some fun out there. Also, it's Friday. Size down. Have fun. Don't think that you're going to make your week. You can definitely break your week.